Welcome to Chart Check, another edition where we are going to look at stocks where fundamentals and technicals are, kind of converging. The first stock I have for you this week is Tata Chemicals, where we can see on the chart, as I have shown here, the stock has been on a bull mode from quite some time, 2009 onwards. But it is like for the next about 5-6 years, the stock was in a bit of a range. And typically when certain divisions are not doing well or the company is going through some sort of capex, the market tends not to reward that stock. So by about the last few years, if you see the last couple of years, there's been this huge upside move on the stock, and this came about after the fertilizer division was sold and the the capex into the consumer products, etc. They all started paying off. I think that is what has really produced this upside movement. And now you can see that the stock is into a fine channel upward, and that channel is on the verge of breaking out, and you can see that there is good amount of support from the volumes as well as the momentum. The volumes have been consistent for quite some time. I think the way Tata Chemical is currently poised, it would be one of the stocks where I think growth in their consumer division, especially Tata Salt, is doing very well. They have diversified into other food items. The drag from the fertilizer division is also gone, and they are improving in other geographies across the world where they are present. So I think collectively all this will probably enable Tata Chemicals to stage a breakout upward. It's moved up to a level where I think the breakout is in the opening, and if we move ahead from here, the next round of the upside action will probably begin from here. I think that has a potential target somewhere around 880 odd rupees. If we were to measure using the the chart sections, and that would set us up for about 15-20 odd percent from where we are currently. So I think Tata Chemicals, with all those various situations in its favor, it's got a robust growth in consumer division. The soda ash prices are on a rise. Company is doing well, completed its kind of capex. There is recovery, like I mentioned, in geographies across Europe and particularly in Africa. I think all these are going to really pan out very well, and that is what the charts are indicating. So we can look for an investment return of about 15-20% across the next several months in this one. So Tata Chemical is the first one. Moving on, we have a second stock, which is Technocraft Industries. Right, Technocraft Industries is having very good trends, but here again, similar to Tata Chemicals, they have very good performing divisions like drum closures and steel scaffolding, and they also have a division which is into textile and which was not really doing very well, even though they are the dominant player, which is a duopoly actually, the drum closure business. And their steel scaffolding business has really picked up substantially over the last few years. The textile division was actually a bit of a drag. Now the key thing for Technocraft is that most of the revenue comes from exports, and right now we have a weak rupee situation which should enable this. Now notice this, that 550 was the last buyback of the stock, currently trading at about 525. It's a debt-free company in a very strong situation as far as its individual businesses are concerned. The textile division, which was the drag, that is now that is broken even and is likely to contribute ahead. All this is combining to produce a chart wherein we can see that there is some sort of consistent growth in prices, and right now the stock is kind of hesitating at about 525 or thereabout. But I expect that there should be a breakout to the upside, and I'd see a price level of around 660 to 680. That would actually represent us with about 20-25% upside from where we are right now. So the stock is into an uptrend, and I would expect that it should continue further. So being a dominant player in certain areas where entry barriers exist and a very low level of competition, I think this is a stock that one could take a look at. Downsides are protected. Very generous management right now, 90% payout in terms of dividend, buybacks at prices around the current level or higher, cash rich company, debt free. I think everything, all the boxes are getting ticked for Technocraft. It's a slower moving stock, but I would definitely suggest going long or being invested into Technocraft for a 25% return across the next 6 to 12 months.
Okay.